Our stock in focus today is BP Plastics, which is a key polyethylene film manufacturer in Asia. Kenanga Research initiated coverage on the counter with an outperform rating and target price of RM2.50, based on 13 times PER on FY21 estimated EPS of 19.2 sen. The stock last closed at RM1.96. Here's why Kenanga is bullish on BP Plastics. For starters, it is seeing robust demand from export and local markets, with first quarter sales volume up 13% quarter-on-quarter. The research house says the company is also gaining market share from its competitors and is able to cater to additional orders. Its average utilization rate of 75% is nearing 80%, upon which it will expand capacity to continue catering to the demand. Now, despite the supply chain disruptions, BP Plastics was able to secure a stable supply of resin, and it's also maintained its elevated average selling prices, even though resin costs have fallen recently. This should provide a boost to its second quarter margins. ASPs will gradually fall and eventually normalize, but BP Plastics does have manufacturing specialities in premium stretch film and customized PE blown film based on customers' requirements, so ASPs for these products tend to be sticky downwards. The company will be acquiring its 9th cast stretch film machine to expand its premium stretch film production capacity. According to Kenanga, BP Plastics commands strong EBIT margins of about 12% versus 10.1% for Tongguan Industries and 9.8% for Scientex's manufacturing segment, most likely due to better operational cost efficiencies and better product mix. Kenanga also likes BP Plastics for its attractive dividend yield and expects it to pay dividends of 9 cents for both FY21 and FY22, representing yields of 5.5%. It is estimating earnings of 36.1 million ringgit for FY21, up 22.4% year-on-year, and 39.4 million ringgit for FY22, up 9% year-on-year. While the company has been posting weaker earnings growth relative to SLP Resources and is relatively smaller versus Tongguan, Kenanga says BP Plastics is grossly undervalued. No other research houses are covering BP Plastics, so to recap, that's one buy with a target price of RM2.50. The counter closed at RM1.96, so that implies a potential return of some 27.6%.